Hi, and welcome back to the Indie Housing Market. I'm Shelly Walters with FC Tucker, and with me is
Kyle.morris with Morris Property Group and FC Tucker in Carmel.
And David McCoige with Tucker Mortgage.
Thanks so much for joining us. And we do have David here. We wanted to pick his brain about mortgages and what's going on in the mortgage world. So just wanted to start with one of the questions we wanted to find out compared to what we see on our side.
Yeah.
What are you seeing? Are you seeing buyers start to pull out of the market at all?
We've seen some of that, and I would guess we look at our pre-approvals, we always try to track that and how demand is working in the market, and we still have probably 175 pre-approved buyers. So there's still a lot of demand in the market, but we've probably seen throughout this year about 30% of our buyers from buyer fatigue, from losing offers, from not being able to compete, decide to rent for another 6 months to a year.
And that's interesting, though, right? Because you're like talking about people who've been in it.
Correct.
What about new applications? Like, I'm curious about that, right? Because so you got the people who've been in it and like, this has been a lot. Like, and I get it, it's been a lot for everybody, but
Right.
but that doesn't mean people aren't getting into it either at the same time, right? Like, so I'm just curious to like kind of quantify that for people.
Yeah, I still think we've got a lot of demand for new pre-approval applications.
Yeah.
Is it down at all, or are you seeing is it steady compared to?
I think it's down a little bit right now, but we're talking about what's happening here in local market.
Right.
It's been 110 degrees over the last couple
And
weeks.
school just started?
College just started. I know
Sports.
myself and so many families have moved their kids down to colleges and moving out, and they're taking last vacations before high school starts and sports start and travel starts.
So we
there's
talk
a lot of
about
that.
seasonal. It's
Seasonal.
a seasonal slowdown.
Mhm.
But I really feel like from the market, what we're seeing, that we're still going to finish strong this year. There's a lot of buyers coming in. What we're seeing is more of the first-time buyer using government loans, using FHA loans and USDA loans with zero down, veterans using zero down loans. Those loans have kind of been pushed to the side, as you've seen, 2020, 2021, beginning of 22. Yeah, it was here's cash, here's conventional, these go to the side.
Right. And that was also, some of the agents were causing that as well because they were saying they weren't as strong as a buyer.
Oh, gosh.
And
Yeah.
you could probably talk to that. Just because it's
FHA
FHA and VA
appraisals,
is not an issue of being a strong or not a strong buyer. So that was a little bit of a perception of agents doing that, saying, oh, we can't accept that.
Absolutely. I think that was a big part of it. The myth that like a VA buyer isn't good. There's so many times we converted VA buyers, they were conventional, and they said, well, you got 20% to put down. I said, well, in this market, you should go VA, and now you've got a 20% appraisal gap.
Yeah.
Way to compete.
Right.
Still a very strong buyer. I mean, you can do VA loans up to $2 million.
And some of them just want to take advantage of the benefit. I think you've helped me with one actually where I had a very liquid buyer who just wanted to use this VA benefit, right? But
Why not?
yeah, but I mean, that's on the agent to convey all that as well,
Yeah.
to a certain extent. But you can't educate somebody who has a perception of something. Like it takes two to tango, so to speak. Like you need the other agent to understand as well.
Yeah, the other agent, when they have 20 offers, it's hard to explain, well, my guy's really solid, and they just don't want to
The
hear
thing I hate too is, it won't appraise FHA. And I'm like, it's a normal appraisal.
Right. What does that
I
mean?
don't know where that has ever come from. Like there's some things like you can't have chipping paint. With VA, there's got to be a rail for the steps, right? It can't be over 16 inches for steps, or you have to split it into two, right? Like there's some safety stuff like that. There's some things, but that doesn't affect value.
It's not going to kill the deal.
Right, yeah.
I mean,
comps are
it
the
depends on the
comps.
seller.
Comps are the comps, the appraisal. Yeah, that is such a big myth that those appraisals are tougher. They're not. They may have some inspection items for habitability and
Conditions are
safety and
closed.
condition, but that's it. The rest of
Windows
the
got to
appraisal-
open. Yeah.
Most buyers are going to ask for that.
Yeah.
Yeah.
It seems.
Well, you were
Right.
talking about, so then we kind of have talked about this in the past on the podcast in regards to us seeing more and more FHA and VA being accepted now, can be accepted. So what are you seeing in regards to your clients? Are you seeing more and more FHA and VA? So what,
Yeah,
the past couple of
absolutely.
years?
So in 2021, near the end, we looked at the year in a total, and I think our total business was around 10% was FHA and VA, government loans in general. 2022, as the rates increased, that kind of helped with some of the government loans because they allow higher qualifying ratios. So as the rates went up, the ratios went up, but they were still able to buy the same amount of house because of the extra ratios that allowed. Our business right now is probably 35%.
Is
Yeah,
FHA and VA, so so what's your average normal in like 5 years ago, what would be a standard?
Say 35%.
So we're back to normal?
We're back to normal with the
Yeah.
amount of government loans that we have.
But it makes me sad because interest rates have gone up, even though like we talked about before we started this, FHA, VA is actually a lower interest rate than a conventional right now, which I don't think a lot of people know. But they're discouraged because their buying power has gone down because they were looking 2 years ago, right? And everything has changed. And so it's just really complicated because they're discouraged. But what they don't realize is that everybody's buying power has gone down. Like, I don't care if you're looking at 300, 500, 600, 100, everybody's buying power has gone down. And so I think people have gotten discouraged with that. And institutional buyers are probably the bigger problem there with that in the past 2 years more than anything. And they have pretty much exited the market for the most part. In the past year.
I'd agree.
Yeah.
And that's also helped because a lot of what the institutional buyers, they were buying first-time buyer homes.
Mhm.
They were buying that in the 150 to 300.
Yep.
And they were buying them by the truckload.
And so
that took
we
away a lot of
want
those
to
buyers.
convey with this exact conversation is for the buyers that have been afraid to get back in the market or didn't even get in the market is you can get in this market right now and you can get your offer accepted. So if you've been tired of it, if you've been, discouraged and had offers not accepted over and over again, it's back, and it's back, like you said, to normal. And we've been seeing the same thing.
Yeah, it's the best time in a long time to be a first-time home buyer.
Yeah, I would agree.
But I feel like they've watched so much news and read so many articles, and a first-time home buyer in general is going to have is going to be slightly unsure or whatever, and that's what the professional is there to walk them through. But they've got everybody in their ear, right? Because it's a big decision, so they are going to ask everybody, as they should. And everybody in the world has gotten a different opinion on the real estate market right now. And 99% of them are uneducated opinions, right? It's just the reality of it. It's my dad who has bought 2 houses trying to tell me, I'm like, man, I do 10 a month. We're good. I don't need your advice on the housing market, Dad, but.
Well, then mom and dad always come to that first time home buyer.
Yeah, which is okay. I encourage it.
Oh no.
I encourage it,
But much rather have them up front.
Yeah.
Don't bring them in at the end.
Yeah.
Bring them in the
Well, that
beginning.
gets to the bringing them at the end or anything that can help us stay in a contract, but we're starting to see it cause issues. So you were going to talk about that.
Yeah, so I just feel like I've seen and heard of a lot of, I don't know necessarily happening. I mean, I do know mutual releases have been at a higher rate since probably beginning of July for some reason. The market's been very odd from July to end of August, disproportionately so, quite honestly. It's been a little bit more stagnant for some reason, even though if you look at the stats, it hasn't been, but when you're out there in it, it's felt a little bit more stagnant, but there's been a lot more fear involved. And I've talked to a lot of other agents or been involved in situations where, whether it happens or not, the discussion of a mutual release has come up more often than it usually does, right? And so the understanding, people are well, I'll just lose my earnest money, and it's just not that simple. I wish it. Actually, I'm glad it isn't that simple now that I think about it.
You're in a contract and it's you're supposed to close.
Yeah, you need to
Unless
talk to
there's
legal
something
counsel.
weird
about
going on,
something
yeah.
like that. The idea that you may just lose your earnest money, that's your best case scenario. Your worst case scenario is there's competitive bids. They can come after you for liquidated damages. You can be sued. They could sue the agent. They can do all types of different things. And historically, that has not happened a lot in the past 2 years because it's I'll just put my house back on the market and sell it today anyways. And I don't.
Or you're so glad you got it.
Exactly.
So now, and we've had conversations where buyers are, we're getting them the houses and they didn't have to go through, maybe somebody's just got into the market in the past 2 months or whatever, and they get the house on the first, try, and they have no idea that they're still very lucky that they got the house.
Yes.
So for them to be, oh, it's no big deal, I'll go get another one, or it's not, they haven't had this buyer fatigue of, thank God I got a house. And that's not going on right now as much, but it's still, it's an important contract that you have to move forward. And, there's just a lot of frustration in the market all the way around.
There is. But I do think, to your point, it has been weird. But I do think the end of the year finishes strong, right? In the past 2 weeks, we have had a lot of people reach out to us. We have buyers coming out of nowhere. We have 9 houses going on the market in the next 45 days. I think it's like getting through Labor Day. Ironically, it's just kind of weird. It seems like right now.
Well, they got to get in before the holidays because a lot of people are
Exactly.
trying to squeeze in that, September, October timeframe. And I was talking about sellers as well. I've, in the past couple of days, received phone calls from sellers who are calling me and saying, I don't know if I do want to sell my house because it looks like it's a tough market. Is it still a seller's market? Because I'm seeing houses on the market, for 20 and 30 days. And I'm like, that's normal. And they just don't think that because every one of them has told me a story, almost every one of them. Well, my neighbor's house sold in a day. And I'm like, you may have heard that. That's just like such a generalized statement. It was probably more like 5, 6, 7, or 8, but everybody
Felt like
just
a day.
always says it's
Yeah.
sold in a day. I'm like, no, let's really look at this.
And they had
They're
a,
so worried about
and they'll be like, they had multiple offers when maybe it just had 7 showings, so it was a ton of interest. They're like, it's just
yeah,
No.
everybody wants to be, in that grandiose scheme, and it's not really happening. So, what else are you seeing that's happening recent, the past 6 months that's changing?
Well, I
Getting better,
think
getting
we're
worse?
still seeing, I mean, if you look at the stats on my board, the prices are still going up.
Mhm.
Yep.
The difference is they're going up at a slower angle. They're not going up
Like a
90
cliff,
degrees.
yeah.
Yeah, which that's
Because
what
we're
it's
not
been
doing the
doing.
escalation clauses as much, nor having to pay 50,000 over list, which is causing the 30-day sales to skyrocket, which is not
Right.
normal. So yeah, we're not
And not
escalating
having,
it
I
during
don't
the
see
offers.
as many appraisal gaps. There's still some, but I'm not seeing those as many
Yeah.
because we're not going so far over where they're like, well, we're not really afraid of this appraising. So I think
Right.
we've seen a lot more low appraisals, or a lot less low
I was going to
appraisals.
ask.
Yeah,
A
I've
lot
seen that.
less, more appraisals.
Yeah,
low
because
appraisals
even
we've
the
seen
ones that
recently.
we've offered over list, like they're appraising because we're not disproportionately over list. Because there was whether we like it or not, there was a buck back from appraisers during all of that because they didn't know how to acclimate to that either, right? Because now they're on the hook for determining the value, and they
Right.
2 years ago you're like, I don't know, like how is this up $20,000 in 2 months, right? But now it's much more normal, and I think we haven't. Quite the contrary, we've had some stuff like appraising over what we're purchasing for and things.
Yeah,
of
my
that
past
nature.
couple sales have been over,
Yeah.
not a lot, but over because
We've seen some of that too.
Yeah.
Because they're priced more normal.
Yep.
But that's also when those houses are taking a normal amount of time to be marketed and sold and
So why do people think it's bad? I mean, it's literally interest rates, right? And because it's been such
it's the media.
100%, right?
And
Because
unfortunately,
what
whatever
they're-
rabbit hole you go down, the AI that's out there will keep feeding you that same thing. So if you see something negative, then the next thing you watch is going to be negative. The next thing you watch, but if you look for the positive, it's out there too.
Right, and the rates are higher than what they have been, but like historically still low. But like if I try to tell people that, they think I'm selling them instead of educating them, right? And I'm like, I'll just be honest. I don't care if you buy or sell a house or not. I'm just here to help if you choose to do so, quite honestly, right? Like that's
Right.
just
right.
not my role is to push a house onto somebody or whatever it may be. But it's not that bad. I mean, it's way different than what it was 2 years ago. Like there's just no way to say that it isn't,
Right.
right? But at the same time, to say that like we're suddenly on some kind of cliff because we're back into like maybe slightly elevated of what it's been in the past decade is what I would say at best. Even then, it's like slightly elevated at that.
Well, the other thing too
I
is,
don't know.
again, we talk about this as we continually say, best time to buy a house was yesterday.
Yep.
But yesterday they were buying, literally being told your house did not appraise. Hand us another $40,000 worth of cash. You are not walking in with equity. You're actually below. And now people are walking in with equity, sometimes with a little bit of an, higher appraisal. So even though the rates are a little bit higher, you're not spending way more on the house than it's actually worth. So what, the difference there is, again, marry the house, date the rate, right? I mean, it's
Absolutely.
still a good one.
It's still good. And there's other options that can help in this market temporarily. The 2-1 buy down.
Which we got, that was a big deal like a year ago, and then it's just like
It didn't last
dropped.
very long.
Yeah.
Why? It's still something to do, correct?
Absolutely.
Yeah.
So it makes a huge difference. And I think in the past year, we tried to market it to buyers. Like, hey, here's the 2-1 buy down. What we should be doing marketing now is to sellers.
That's what I do.
Because
and call you and
Right.
say,
What's
how
the
much is
dollar
it going to
amount?
cost
Yeah.
me to do this 2-1 buy down? And I tell you it's a 300,000. Let's just do an example here. So if I call you and I say, I have a $300,000 listing and I want my seller to just offer that because I think it's going to help us be competitive. It's also, first off, a lot of agents say, well, you're just automatically taking money out of the seller's pocket. Actually, no, I'm trying to bring more buyers the ability to purchase this home,
Which
because
makes
if
it competitive.
10, right, so if
Yeah.
10 buyers are out there going, well, I can't buy that house. Well, now maybe 8 will, because they see that there's an incentive from the seller. So my $300,000 house, what is my seller's concessions going to be? Can you, like,
Ballpark, about 2.5 points.
so $7,000?
Exactly.
To me, that's a no-brainer. If you've got it, $7,000 to
And if you
not,
sit on the market just to take 10 less maybe or something, right? So
Right,
like I'd rather
right,
just
yeah.
sell it,
and a buyer's not going to lowball you more than likely if you've been on the market for 30 days, and let's just say they're going to come in and offer you 5,000 less. They may give you less now because they know they're getting concessions. So I think it's a great selling point, but a lot of agents and a lot of sellers go, I'm not offering anything. It's a seller's market. But you still want to give the best deal to the best buyer and get
Exactly. The
competition
whole
going.
thing, bring competition, more
Yeah.
buyers as possible, and that.
So
Think
just
it-
call
if
you
you
and
have
say,
the-
how much?
Exactly. And here, if you have houses sitting right next to each other, this one's 300 and this one's 300, and you can say, okay, if you buy this house, you're going to save $7,000 over the next 2 years on your monthly payments. This one, they're going to do a price reduction of $7,000, and you're going to save $55 a month
Yeah.
on your payment.
Right, because the
What are
2-1,
they gonna
explain the
take?
2-1 buy down, because I know a lot of people don't know what that
Yeah,
is.
so the 2-1 buy down, it's basically whatever the start rate is, the current rates right now. So let's say they're at 7.75. Your first year, your interest rate on your new mortgage would be calculated at 2% below that, at
And that's the
5.75.
2 of the 2-1 buy down.
Yeah.
Correct.
For the first year.
For the first 12 months,
Yep.
your rate and your payment is based on 5.75. The second year, it's based on 6.75. And the third year and thereafter, it's 7.75. What a lot of experts are saying in the market is by the time we get inflation in control, that we'll start seeing in 24 and through 25, the rates drop. So we could be in the 4s or 5s in 2 years. So a lot of people are using this as a hedge. It's like, okay, if I can save $500 a month for the first year, maybe 200 or 300 for the second year, and now the rates are lower and I can refinance to those same rates, this gets me my house.
It's really, to me, the way out of this mess
Mhm.
for everybody.
It-
It's available. It's not something only like 800 credit score people can get. And
Right.
that, so does it have anything to do with that, or is it just something a seller can offer? Does a buyer have to be able to qualify to receive that?
They have to qualify at the start rate or at the higher rate, whatever the note
Okay,
rate is.
yeah.
So they have to still be able to qualify at that payment because we don't want
Because
to
at 3 years, yeah.
in 2 years, if the rates don't drop, we don't want anybody to lose their house.
Right.
Right.
But it's
Right.
not a way to get them to qualify for it. It's a way to say, okay, you can qualify for this house, but we're going to save some money over the next 2 years. And then you refinance when the rates are lower.
Yeah.
So I have a question for that then. So, because I have a client, I was just talking to him, and we got him a house, I don't know, beginning of the spring, right? And they did an ARM. And, an ARM, depending on how risk averse you are, whatever, does that apply to an ARM? Does a 2-1 buy down apply to an ARM?
No.
Yep.
So to do one of this. So, and most of the arms now are hybrid arms. They're
Yeah.
not 1-year arms. So they're,
This is like a 5, I think.
yeah,
or something.
the ones we do are 5 years and up. So we have a 5-year arm, a 7-year, a 10-year, and a 15-year arm. So with those, you're going to be fixed. Your initial rate's fixed for 5 years, 7 years, 10 years, or 15. So it's not a lot of risk. That's getting them easily through the next couple of years where hopefully they can refinance to a fixed
Which I'm
rate.
surprised that hasn't happened as much, that people haven't discussed it, but there's so much stigma that goes into that associated with 2008 and 2009 and everything that happened back then. And the people just hear ARM and they don't educate themselves. And I mean, it depends, like I said, based on like how risk averse you are, because it's really not that risky to a certain extent. But to imply that there's none is also just not realistic, right? To a certain
Correct.
extent, right? But I'm surprised we haven't seen more of that as a temporary solution
I
as
think
well.
I think you're right. A lot of it is the stigma
Yeah.
that people have. They think to that, but they're not comparing these arms that are fixed initially for 5 years plus. Those arms that got in trouble in 2008
They were
were
3
fixed
years.
for 1 month.
1 month, I saw some.
They were
3
fixed
years
month
then,
to
too.
month. So
Oh.
the rate could change substantially in a month.
That's when I started, 2008.
Yeah,
Call it the good old days.
Yeah.
the good old days.
Well, and so I think it gets down to agents. We always say we're going to stay in our lane, but as an agent, you really need to understand at least the nuances of all these types of loans and
Absolutely.
products to help your client, buyer and seller. So if you're a listing agent and you want to help your seller, I think, understand what they can offer for the buyers, and for the buyer's agent, they need to understand what they can tell them. Obviously, the lender, the loan officer is always talking to them about what's out there, but the buyer needs to know what's available to them, and the agent needs to understand what's available to them to work through the whole process. And that's just agents being as well
Being
versed.
educated on their
Yeah.
market too.
But that takes time. I mean, that took me time. Like I had to have a passion to like educate myself, right? Or like you get asked a question you don't know an answer to, and like I don't ever want that to happen again, right? So then I find the answers to these things, and like you just start to grow and evolve. And we have had a lot of agents come in since COVID. I came in a little bit before that, so like I've had the luxury of both to a certain extent, but I don't know how much education was, I don't want to say required because that's not, but I don't feel like there was a sense of urgency with it over the past couple of years to educate yourself on some of these things.
Well, and a lot of that's just time. Think how busy you are.
Yeah.
I mean, we know we talk about buyer fatigue, but also what's very real is realtor fatigue.
Yes.
You two, I know, are two of the hardest working agents I know, and man, I'm sure there's times you're just like, I just want to run away.
I run on,
but you don't.
minutes
You
and energy
keep
drinks.
going.
Energy drinks, yeah.
24/7.
Yeah,
I got used to those.
You keep going and you educate yourself and you do the
But I
best for
know
your
you
clients.
do have those classes. You
Yeah,
offer them yourself.
absolutely.
So just training, when they're available, go to them when you do have a downtime. But any last minute things you want to tell us?
I would
that's
say like
important?
the buy down and pitching this to listing it's necessity becomes the mother of invention.
Yeah.
When you think of something, this came about because an agent here asked me, said, I know this house is priced right. I know it is, but it's been on the market 3 weeks and my sellers are freaking out. What can I do? And they want to do a price reduction. And I said, how much? It's like $10,000. It was a $400,000 house. I'm like, don't do a price reduction. Offer a 2-1 buy down. It saves $505 a month for that buyer. When the rate
That's a big difference.
$505 a month for the first year, and it was $265 for the second year. It was $9,100 that buyer was going to save. They sold that house the next day.
Which is probably like a sixth of what that mortgage payment was around there, maybe
Yeah.
a little bit. But yeah, I mean, that's a significant chunk of that.
It was a
mortgage payment.
big chunk.
Well,
of that.
and the seller is not going to lose money in the end. Like you said, first price reduction is usually more than that 2-1 buy down offer. And the 2-1 buy down offer brings more buyers available. So to me, it's a no brainer, and it's just something to really understand and know about and put it out there.
Yeah, absolutely.
It's weird. So even though like we're not really going to the stats, the way we usually do with David here, which I'm really glad that you were here, and we talked about how it feels like it's slowing down. And none of my numbers actually suggest
Yeah, we
that.
can go over those really,
I
really
mean,
quick so we can.
Like
kind of
even
go
like
through
in broad strokes, right? Like for me, like Fisher's 42 and on the market, 10 of them pended, 32 are still active, right? And so it's like, okay, only 10 pended. Well, 39 actually pended, right? That was just 10 that went on in a week, right? Which is why I have 7 for average days on market. It's the median is 7, and I'm like 30 for average days on market when you take into account the other 29 that pended that week. But 11 pended the week before that, 11 pended the week before that, 12 pended the week before that, right? Like it hasn't slowed down at all. It's stayed steady state. Like I just think people are tired. Noblesville is basically the same. 38 went on the market, 27 are active, 11 pended, 27 of them. I've got a slight uptick in inventory of like 3 and 4 and 5 and 6 houses. It's not like 20 houses are suddenly staying on the market week over week or anything like that. We've kind of stayed steady state. And I do think there will be a bunch of houses that come on the market here coming into September.
I do too.
And I
Not a
think there'll be-
bunch, not many,
Not a bunch,
but I think that it's going to break loose because of the back to school and everything like
Yeah.
that. Yeah.
Yep. So
So for Carmel, we had 33 hit the market, only 12 pended, as like you're saying, and the average days on market were 14, and the median was 4. Same week after week after week. In Carmel, we have 108 active, 33 are new builds, and in past 30 days, the average days on market was 18, with median 5 for all that sold in the past 30 days, staying steady. Westfield, 42 hit the market, only 8 sold in that, but for them, we have so many, we always talk about this as new builds, so the average days was 44 in Westfield. That's eating up all those new builds, and 24 days on market for the median. So Westfield's going up, but currently they have 122 new builds on the market only 92 are resales. So there's just a ton of inventory in Westville, causing these days of market to be very high. So anybody as a seller who's going, look at that house, it's, what the average days on market, you just told me is 44. Well, let's pull away all those new builds, and now we're back to, on 30 days, 11.
Yep.
So it's how you throw stats out, is how you pull them back, is what you need to look at, not just the general media and everything like we do every week. Zionsville, 12 hit the market, 2 sold. Again, in the past 30 days, 58 sold completely, 27 average, 9 days on market, so, median. It's not changing at all.
Even at the beginning of the kind of like what we would call a selling season, even though I don't really think we super have one anymore here, we were at, I think the lowest we ever got was 18 days on market as an average. We were always around this 18 to 22, even back in April, May, and June. So it's not, you're talking about a week and a half's difference from where we were at the height of this year.
Right.
And so, but I feel it. Like it feels like something's going on, even though I know it isn't quantitatively, but like I'm just tired, to a certain extent. And we've been running nonstop for 3 years. So let alone me, like what does the consumers think? And so like, I just always want to make sure like to get the stats and the facts to actually be like, I get you're hearing a lot of this, but like statistically, like that's just not happening.
Yeah. Like I said, for the sellers who are reaching out and saying these houses, they're not selling anymore. What's going on? It's been on the market for 3 or 4 weeks. And it's just that perception, and really need to sit and talk to a loan officer or a lender, the agents who are in this every day and come up with what's really happening in your neighborhood, because it's neighborhood specific as well.
Mm-hmm.
So yeah, but thanks so much.
Yeah,
Can we give
absolutely.
your phone number or email, how to get a hold of you?
Yeah, phone number's 317-752-1192, and the email is david.mccoige, MCCOIGE @tuckermortgage.com.
Thank you. I'm not Shelly Walters.
I've been mispronouncing his name for 7 years. That's all I know. I can't help it. I'm sorry, I interrupted you. I'm Kyle Morris of Morris Property Group, 317-649-5122. And it's a pretty easy last name to enunciate.
Yes, it is.
Shelly Walters with SC Tucker, 317-201-2601. Thanks so much for joining the Indy Housing Market. How do you say that? Indy Housing Market.
It's as hard as his
Good
last name.
Lord, yeah.
That's all I know.
Thank you. Bye.
Goodbye.